Hey, what's up, guys? This is going to be the trade review for Monday, the 22nd. Another fantastic day, man. This winning streak just continues, guys. For the new members in the Discord, I highly suggest you guys take some time out of your day or your weekend, whenever you have free time, and go watch all my videos. Okay, it's gonna explain obviously how I trade, but it's gonna answer so many questions you guys have. Okay, um, how I trade is very simple. I don't overcomplicate things, and you guys will be very surprised on how I take trades and stuff. It may seem complicated when you read the type outs, but that's why I make these videos for you guys, because it's easier for you guys to understand when I actually talk it out to you guys. Okay, so I highly suggest you guys go watch those videos. Also, go watch, go watch all of them, the trade review videos. But also, what's very important, go watch how to find key levels. That's a great video. That's how I start my day every day. And the fair value gap continuation trade or model, that's one of the strategies I use. And then my number one setup, that there's another video, and there's a bunch of trade examples for you guys as well. So, anyways, let's get to it. So, this is Nasdaq. We're in session right now, so we are. It's 10:15 right now. This candle that's printing right now. But going into the open, where my cursor is, I like to do this so you guys can see. Right there was 9:30. Okay, so let's forget about the open. Let me show you what did before the open. Okay, so these other vertical lines, except for what's this one? This one can get deleted. Um, this one can get deleted. Okay, so this vertical line and this vertical line, there's 24 hours between it. So this is one 24-hour session, 24-hour session. Okay, so but this one is the 9:30 open. So, anyways, before the open, what do? I mark out my highs and my lows. So Asia low, then this right here was at 12:40 a.m. So that is just a sell side liquidity level. Above it, we had this buy side, and then we have all time high up here at 31. What is it? 31 110. Okay. So, and then I like to look for my gaps, and I love looking for gaps that align with liquidity levels, right? Like there's a stacked 15-minute gap at this buy side liquidity level. It's a great level, because when it is lined up with a liquidity level, it makes that level even stronger. Like, look what's happening right now. It's melting off of the stacked 15-minute gaps in this buy side. So we came up, swept, but look at we broke above it a little bit, but we haven't been able to take out this buy side, and now it's dumping. So I love looking for overlapping levels. Okay, so that was the level I put. We had stacked 15 minutes right here with the current session London low, and then we had the current session London high, which was up here. Okay, and then we had this nice uptrend in the overnight session. So I threw on my volume profile to see where all the volume was coming from price, right? So you can see your imbalances, which are these low volume nodes, and then you got your high volume nodes, and then this yellow line is the POC, right? So going into the open, I mentioned this in Discord. I said there's two scenarios I am going to be looking for. So anytime before I get into a trade, I need to see some type of liquidity swept. Okay, so I don't trade in the middle of liquidity levels. There's a saying that says, "Don't diddle in the middle," right? So you sell from highs, you buy from lows, you don't diddle in the middle. Okay, guys. So let me drop down to the 1 minute. Okay, so this is going into the open. So right here, what I mentioned in Discord was in my morning analysis, what I said was I am looking for price to come up, sweep this buy side, respect this 15-minute gap, reverse, and have an inversion, and then hunt the lows. Okay. Then my other analysis was to price to come down, sweep these lows, respect these stacked 15-minute gaps, reverse, and hunt these highs. Okay. Let's see if we even got one on the 30. Yeah, so there it was. Yeah, this is what I did, right? So look at on the 1 minute. This is a 1 minute time frame. So we open, we push right up to this buy side. We respect this gap. Exactly what I said I was looking for, but there's no inversion on the 1 minute time frame. Okay. So if you jump down to the 30-second, which I messed up today, I didn't. Okay. So I got a bad fill. So look at, we reverse. There's a bullish, oops. There is a bullish gap right here that price made when it pushed higher. Okay, right there. So we come up, we sweep buy side, we respect the stacked 15-minute gaps. We come down, we inverse that gap. Okay. We enter. Either you put your stop above the highs, matters how much you're risking. I tend to put it just above the bullish gap. So it comes down. Full TP would have been down here, this sell side liquidity level and the stack gaps, but I didn't enter there. I was looking at a couple other things. I had mine still on the 1 minute, so I got a later entry. We have this big 1 minute gap right here. So I actually waited until this candle right here. I waited for this candle to hit, and my original TP was down here. Okay. And I entered on this candle right here. Okay. And the POC is at a different level now. The POC was down here at these lows. So when we were struggling, it almost got down to the POC, the point of control, and it didn't hit it. And when it struggled, I got out, and it was like $1,400. But it was not the best trade on my part. Really, not the best trade. So I should have dropped down to the 30-second, because typically what you do is you try to find a fair value gap on your highest time frame. So like from 5 minute to 3 minute, 2 minute, 1 minute. And if none of those have it, you go to the 30-second. 30-second was beautiful. I don't know why I didn't jump down. Shit happens, but I still made $1,400 on that trade. It was like 13 something. Okay. So after that trade, let's take this off. Okay. After that trade, we did not take out these lows, right? And come down, but all of this is pretty much trend line liquidity, LRL, so low resistant liquidity run is what LRLR is, or LRLR, low resistant liquidity run. So like trend line liquidity. So below every single one of these lows, there's going to be people stops from where they entered on these dips. Okay. So we come down, we sweep this low. This is a powerful low here. Look how many times it tried to break low, didn't break lower, went up higher. We swept these lows, we swept these lows, and we swept these lows, and then we like tapped into these. Okay. So on this one, we bounce, and this is a 30-second. I actually did it on the 1 minute. Again, I didn't drop down to the 30-second today. Guess I wasn't on my game. Usually I would have checked the 30-second too. But okay, so we come down, we bounce, we wick. Okay, we have a bearish gap right here that price created. Okay, so I didn't wait. As I mentioned in the analysis today, sometimes you enter on just the break and the inversion of it, or you can wait for the retest. There isn't always a retest of the gap. A lot of times I don't wait for the retest. I like to just enter as it's breaking. But sometimes you are going to have to deal with some drawdown, right? But today it worked out perfect. So as we broke this bearish gap, I entered. and I put a conservative take profit on again because of these stacked gaps. We respected it the first time. We have the high here. Should have put it up at least at this high, but what did I do? I put it at the beginning of the 15-minute gap, right? And it went up and took me out for 14 something. So another, what was it? Yeah, so 60 points right there. So those two trades nailed it, up 2,900 bucks, and we call it a day. On the order flow for today, I can't show you right now because if I bring order flow onto this screen for some reason, it won't show you in the middle of me recording. There was some volume coming in, but nothing like there usually is. So one reason I did take this trade was there was a little bit of absorption here, and then I saw heavy buyers step in, but not too much. There was a 22 contract order right here and a 25 contract order right here, but there was no selling. So that, that's one reason I jumped in once we got above this bearish gap. TP there, boom, two trades, call it a day. I called out both of these trades today. Very simple trades. You got to be confident in them. You got to be willing to risk whatever you're. What am I trying to say here? You got to be comfortable with whatever you're risking, right? So figure out your risk first. At least know somewhat of what you're risking. And then if you're comfortable with it, jump in the trade. Okay. So anyways, yeah, two solid trades, guys, and that's it. And look, again, another solid trade. Come down, we tap into these lows. Here's a bearish gap, we inverse it. Okay, comes down. Here's a great example of a retest. Comes down, doesn't necessarily retest the gap, but it doesn't break lower the gap. You could have entered here, put it there. Okay, another trade down to the lows, right? So kind of a choppy day, not choppy, but back and forth, back and forth. It's definitely not a trend day. I thought we were gonna hunt these highs, and we still might. I mean, it's still early. It's only 10:30. Okay, I was done trading today at pretty crazy 9:37. 7 minutes of trading, 2,900 bucks. Okay, so hope you guys learned something from this. Go watch my videos, and I will catch you on the next one.